Why do I have to pay insurance for the first year in full if it's also being collected monthly in my mortgage payment? If that question made your closing costs feel confusing or even alarming, then you're not alone. I'm Suzanne Cupit with Vessel Mortgage, and this is one of the most common questions I see from buyers and see online. Let's walk through what's actually happening. The difference really comes down to when the insurance is paid and what it's covering. The homeowner's insurance payment you make at closing is collected so the policy can be paid as of the day you buy the house. That way you have insurance coverage immediately starting on day one. This protects you as a homeowner, and it also protects the lender because everyone wants to make sure that home is fully insured the moment you have ownership of it. That payment goes directly to the insurance company. It's not escrow, it's not monthly, and it's not being paid twice. You're paying for insurance for this year. Now, early in the process, insurance and property taxes are estimated. Once that real insurance policy is issued or the actual tax numbers are confirmed, then those figures can change. Another very common reason closing costs can increase is that you pay interest from the day of the month you close to the end of the month. So if your estimate is based on you closing, say, on the 28th, then you might only have 2 days of interest in there. But if you wind up closing on the 15th, you could have 15. That increases the amount of money you need to come up with. Escrow is not an extra fee. Think of escrow like the mortgage company budgeting and saving for you each month for your bills that are only paid once a year, which is your insurance and your taxes. Instead of one large bill later, you're setting aside a smaller amount each month, same total cost over time, just no surprises. Another question I hear all the time is, can I pay my taxes and insurance myself? For some loan types, you can, but this is something to think about. Timing matters. Your property taxes are usually due at the end of the year, maybe the beginning of the year. That's right at Christmas. Do you want that big bill? And then also, your insurance is going to be due a year after you close. Figure out if that's vacation time or maybe when tuition is due. You want to make sure that you're not setting yourself up to have a big bill at a time that you're not ready to pay it. It will lower the amount you have to pay each month, but in actuality, you're going to need to be doing the budgeting instead of the mortgage company. Now, another important detail is if flood insurance is required to be carried as part of your mortgage, then you have to pay it as part of your mortgage payment typically. There's a certain flood zones that require flood insurance and certain flood zones that don't, and your lender will be able to work with you on that. This part of the mortgage process creates unnecessary stress when it isn't fully explained. At Vessel Mortgage, our mission is to create clarity, and that way you can have calm moments throughout the loan process and buy your house with happiness and joy and not stress. I'm Suzanne Cupit with Vessel Mortgage. I'm at 504-949-0070, and we would love to walk you through the mortgage process and get you in your new home.